Hello everyone, welcome to series of videos on revenue management cloud services. In short, we call it RMCS in Fusion Financials. This is the third video of this series. In previous video, let me just tell in the previous two videos, we went through the 5-step model given by IFRS 15. We took a business example to understand different typical terms which are used in RMCS. What is the business need of that, and what is the significance of those stuff. In detail, in the second video, we were going in detail with these steps. We completed up to this one, allocate transaction price, where we went through the calculation of allocating the contract amount into different performance obligations based on the standalone selling price. In short, we call it SSP. Now let us proceed to the next step, that is called recognized revenue. So, as we know, as and when a product or service delivered, means it is customer accept that okay, it has been is satisfied with the delivery, we recognize the revenue. So that is why recognition of revenue occurs up to the extent of performance obligation satisfaction. So what does it mean? Let us understand this with the same example what we were going through. The order was placed for this by customer on 31st December 2021. The air conditioner was delivered on 31st December 21 itself. So it's fair to assume that the performance obligation for this contract as AC, air conditioner, is satisfied because it has been delivered to the customer on 31st December 2021. But installation was done next very day. So on 31st December 21, the installation was not complete. So we should not be recognizing the revenue for the installation. It should be recognized when the installation is completed, that is January 1st, 22. To put it in summary, as and when the performance obligation is satisfied, that much revenue should be recognized. Now, to make a generalized solution in Oracle, so this brings, sorry to change my line of explanation. Now, this explanation brings us to another term which is used, that is called SMR. Satisfaction Measurement Model. And why do we need this? Because satisfaction for AC may be different from satisfaction for installation and satisfaction for insurance. The PO obligation satisfaction for AC gets completed the moment AC got delivered. PO obligation of installation gets satisfied the moment installation is complete. But what happens if, assume that on 1st January 22, 50% of installation is done and 50% could not be done because of different reasons? Should not be recognized the revenue for 50%? Answer is yes. So here itself we can see the satisfaction measurement for AC was done based on quantity, whereas satisfaction measurement for installation is done based on percentage, because We cannot really split the installation into number of units because it's one unit in all, and it is getting delivered step by step on the percentage basis. So another kind of satisfaction measurement is percentage. If we take the third example, which is insurance, we sold the insurance for 6,000 on 31st December 21, and this insurance covers from 1st January 22 to 31st December 22, right, for 1 year. Should we recognize the 6,000 on 1st January 22? Answer is no, because this insurance coverage is for complete 1 year. As and when the number of days gets completed, that much of insurance, that much of amount for the insurance delivery should be recognized. For an example, on 31st January 22, this should be recognizing for 6,000 divided by 12. Or there can be some different mechanism for calculating the amount. The point I want to say that after a year, after a month, we should be recognizing the amount as per according to the number of coverage is completed, right? So now here we can see that insurance measurement for satisfaction in case of insurance is not based on quantity, is not based on quantity percentage, rather it is based on period. So SMM are of 3 types in RMCS, and those are quantity, percentage, and period. And just we saw one example to explain this. I hope that is clear. Coming back to revenue recognition. So based on the SMM, satisfaction measurement model, now each item what we sell is attached with a particular SMM. Like AC will be attached with a quantity type of SMM, installation will be attached with a percentage type of SMM, and insurance will be attached to a period type of SMM. So as and when we say that SMM is completed, that much of the amount should be recognized as revenue. For an example, let us come to this example. The moment we say that AC is delivered, we should be recognizing revenue for the AC. When we say 20% of installation is complete, then we should be recognizing 20% of revenue on that particular day. So this is how we should do the revenue recognition. That's what we call extent of PO satisfaction completed. That means whatever performance obligation, whatever amount of performance obligation is completed, that much of revenue should be recognized. So this brings us to completion of all these 5 steps, explanation of all the 5 steps, what it is, what are the different unit terms which will be used in the RMCS. I think those things we discussed. Now, after this, we will see in application RMCS, we will take an example and see how all these processes are done in RMCS. But before that, I would like to cover another aspect, that is accounting of this in RMCS. Okay. So before going to application, let me cover the accounting part. So let us flow with the business, different steps to business. So the moment a contract is created, right, and it is interfaced to RMCS, rather I think this is the contract which we interface to RMCS. This is this is the contract. Amount is different. Here it is different amount, but to explain the TP allocation, I took the different amount of the items. So the moment the contract is interfaced to RMCS, all these things are done, like transaction price allocation and everything. This sort of data is created according to the formulas what I explained in the previous video. Now, the moment this contract is available in RMCS, from the organizational perspective, it means like this. I have a contract to deliver. I have got that much of, that means that's a contract asset for me. That is an order I have got. That's an asset for me. So the contract asset gets delivered, get debited for the contract amount. At the same time, organization becomes liable to deliver the contract. So contract liability gets credited with the contract amount. So this is the accounting entry, and accounting event is called initial performance. After this, when I say that AC is delivered to customer, that means this much the respective revenue for the AC should be recognized. So assume that this PO obligation is satisfied. The SMM, according to the SMM model, the PO obligation is satisfied. The respective accounting will be created like this. Contract liability means I was liable for certain amount. I will liable for this much for this contract. Out of that, some part I have already delivered. That is, my liability gets decreased. So the liability gets debited here, and revenue, and I recognize the revenue as a credit. And what is the amount? Amount will be the allocated transaction price. Because though I am selling this at 20,000, but according to the contract amount and SSP, though this AC I am selling at 20,000, but actually it values this according to this contract. So that much of contract liability gets debited and respective revenue gets credited. Similarly, as and when this will be delivered, a respective account will be created for those events. And that event is called performance obligation satisfied. So this is another set of accounting in RMCS. Now let us take a divergence from here and let us go to receivable. Now, whenever we create, so this contract is created, so we will bill to the customer. So the billing is done assuming receivable, and I create a AR invoice. So in AR invoice, accounting entry for this will be debited. So what will be debited by 25,000. In fact, there will be 3 different items, but I'm just putting everything in one. And in general, we credit the revenue. But if we are doing the revenue recognition in RMCS, then in AR, instead of revenue clearing will be credited by the respective. Okay. After this billing information will be interfaced to RMCS. At that time, performance obligation billed is the event. For that, accounting will occur in AR. And how the accounting entry will be? Let us just take first example for the one item, and then we will see the complete accounting. So for the AC, air conditioner, for the PO build event, accounting entry will be like this. Revenue clearing account will be debited by 20,000, the amount, this amount, which is part of here. In fact, let me just put this now another way. So in AR, accounting will be receivable debit 20,000 for the AC and revenue clearing credit 20,000 for the air conditioner. Now, when this is interfaced to RMCS, revenue clearing will be debited by 20,000. By doing so, this will get nullified. Now, I recognize the revenue for this amount. So, and if you see my contract asset, which was 25,000, this 25,000, if we total this allocated, this also becomes 25,000 because we allocated this according to the TP allocation. So the contract asset will be credited by the allocated amount, this amount. The balance will go to discount. This 20,000 minus this will be discount. Now let us understand the business significance of this. Generally, I sell this air conditioner at 20,000 currency unit. But in this contract, the installation guy can say that you are able to sell the AC, the air conditioner, because we are giving the free service, right? So in fact, the air conditioner, what is sold, is not worth of 20,000 in this contract. It worth less because customer is buying that because installation has been given free, right? That means its standard price is 20,000, but it is in fact, it generated revenue of this much amount. So I'm giving a discount of this minus this. And that is what is taken care in this account. Now let me unhide this quantity. So this is how accounting will be for all the three different performance obligations, what I have in my contract. So I hope this accounting entry is clear. So with this, I think the more of the conceptual part for RMCS I have covered. Now, in the next video, we will go through this stuff in RMCS application in Fusion Financials. So thanks a lot for watching. Bye for now.